Good morning, everyone. You can thank the weather for why Annie was not able to join us. But I'm very happy to be here. My name is Cristina Nuñez. I am the co-founder of True Beauty Ventures. And I'm joined here on stage by my co-founder, Gersten, and by Lach Hall, who's the co-founder of Vacation, one of True Beauty Ventures' portfolio brands. So today we're going to talk a little bit about the power of brand and what it means to build a disruptive brand in venture and in consumer. We spend a lot of time in venture talking about uncertainty, and consumer definitely tends to be put in that bucket, sometimes even more than software. But our experience has been quite the opposite, in fact. In certain categories, consumer behavior is one of the most observable and repeatable data sets in the private markets. People don't randomly think about when they're going to brush their teeth or wash their face or protect their skin. They build this into their routines, and routines create revenue patterns. So while most investors think of consumer as trend-driven or laid with risk, we believe in underwriting consumer behavior and habit formation, and that's a way that we create liquidity for our investors. And we built TBV around this belief. Now, we didn't set up to build a consumer fund. We built a firm around a sector expertise, around a white space, and around a specific growth profile. And our sector focus doesn't just give us access to the best brands in beauty, health, and wellness. It allows us to increase our conviction as risk declines and concentrate ownership where inevitability becomes clear. And that's how brand insight becomes investor outcomes. Now, beauty, health, and wellness behave very differently. These are necessity-driven categories embedded in daily routine. They have strong margin structures, they have repeated purchases, and they're embedded deeply in a very active buyer universe. And those characteristics don't just create growth opportunities, they create optionality. And so rather than talk about how big the market is, which trust me, it is, we like to think about the market as how active the buyer universe is. So as you can see on this chart, and I apologize, it's quite small, the strategics are very dependent on indie brands for growth. This creates a very diverse and active buyer universe. In fact, in beauty, multiples have traded at a premium to broader consumer. And you can see here on the right-hand side some of the average multiples. There is strong revenue and exit arbitrage at exit in this category. And acquirers are constantly looking for culturally relevant brands and those with clean growth profiles that they could bring into their portfolios. And so what is the power of a disruptive brand in this category? This slide really isn't meant to highlight all of these individual brands, but it's really to show pattern repetition. Across categories, channels, price points, we have observed the same progression. A brand establishes emotional ownership first, then they expand into retail where they prove demand rather than testing the demand. And then you start to see the strategic interest appears earlier than what you would traditionally see in other venture categories. And so what matters really isn't that we've invested in these types of brands, but it's that we saw the signal quite early and we acted decisively upon it. And we'll actually walk through a live example with Vacation shortly, and that's really where you can see how specialization has an edge. And an edge drives returns. First, with signal recognition. Leveraging expertise and access to recognize inevitability before scale. Second, partnership and execution. Having the team and the platform to be able to support founders as they sequence their growth without compromising on margins or brand equity. And then the third is focusing on the outcomes. Increasing ownership concentration as risks start to decline, and also thinking about how we create liquidity optionality for our investors. And we know that returns don't just come from the first check. They come from the conviction that shows up after proof and the ability to follow on meaningfully in your winners. And you need a framework for picking winners, especially in this category. When product quality is real, when positioning is differentiated, when scalability, performance really shows that something is scalable, when the people are exceptional, and when the partnership is aligned, risk materially decreases. And that's when we lean in. So rather than walk through more theoretical examples, I actually want to introduce Lach Hall, the co-founder of Vacation. Vacation's a great example of a brand where we detected those early signals of something that could be more than just product, that it could be a brand that would eventually become inevitable. And when we invested in their Series A, it was early, but the proof that the brand demonstrated, the strength of our conviction, led us to lead their Series B round. So Lach, please take us back to the very beginning.
Thanks so much, Cristina. Do we have the PDF? Yeah, great. So my name's Lach Hall. I'm one of the co-founders of Vacation. We are a leisure-enhancing sunscreen company out of Miami, USA. We're available in 17,000 doors with over 500,000 points of distribution. And we're very fortunate to, and very grateful and excited to share that we've been named one of the fastest growing sunscreen brand in the US for the last 2 years running by Nielsen. So I don't think you guys have actually seen this slide before, but disruptive brands is something that talking about this is something that not only is like interesting and true about Vacation, but it's actually something that's true for my whole career. I actually started out in a band, and bands had to use creativity out of necessity to get attention because bands don't have any money. And so that I used that back then out of necessity, but then learned the power of how to use creativity to get attention and disrupt the media and things like that into an advertising career. And I did sort of campaigns like this one here, which was for Who Gives a Crap toilet paper brand, where we set the founder live streamed on the internet, sitting down on the toilet, trying to raise $50,000, and he wasn't going to get off until that happened. And then the one on the right was for a hotel brand. It was an art-based hotel brand that we bought a $20,000 Banksy painting and put it up and asked people to, if they could stay the night and steal the art, it was theirs to keep. So all these things got sort of global media, and it cost us very little to do. So it's just how do you use creativity to get attention? So fast forward into 2017, I was freelancing with my co-founder, this guy here, Dakota Green, in Mexico in advertising, and we were looking to start our own thing. And one of the things, very long story short, we were, as you can imagine, in Mexico, spent a lot of time on the beach, drinking pina coladas, wearing sunscreen, and it dawned on us one day, why is it that sunscreen's so boring when it's used in places that are anything but? And so we thought with a bit of creativity, could we create a sunscreen brand that people actually look forward to wearing, that wasn't a chore, something you'd want to pose with, tell your friends about, and just like a good book or your favorite sunglasses would actually enhance your moment in the sun. So that led us to Vacation Leisure Enhancing Sunscreen, which comes together in 4 ways. Innovative wild products like our whipped cream based sunscreen here, sensorial focus, clean classic formulation process, and doing it all with a very, very immersive brand world that, like our products, that's designed to transport you to paradise. Comes together for us in a way that's akin to what we call the Willy Wonka section of the sunscreen aisle, a very powerful sort of way that has formed a kind of a flywheel of growth for us. So we didn't actually set out to do that. It came about from necessity about how do we make a whipped cream sunscreen or a baby oil and things like that. And we changed the packaging to actually feel like this little sunscreen mini bar. But it ended up being one of the most powerful things we could do in terms of disrupting the category. If you think about the sunscreen section, we completely look different on the shelf. We look like the fun choice. And so basically the flywheel works that people walk past, they go, why the hell's a whipped cream doing in the sunscreen section? It makes them take a look. Then the next thing that's interesting, so we stand out from there, but the next thing we found is that we changed the behavior of how people use sunscreen. They start to buy more of it and take different variations of it down to the beach, just like you might with books and drinks and things like that. So we build the basket, changing the category there. Then it forms that whilst people are using it, we generate a lot of UGC, and then that drives the growth in terms of the upper funnel. So that whole flywheel generates for about 5 million views a week for us in TikTok views and earned media, just from the packaging and the positioning alone, which has really been the bedrock of how we've been able to grow. And I think because the reason we have that foundation, any form of paid media and marketing that we do on top of it is just like pouring gasoline on the fire. And we take that idea from the packaging and the product experience about how we can use it to generate word of mouth and generate attention, and apply it across the entire consumer journey too. So for what does our website look like? What does the unboxing experience look like? And things like that. We could think, how can we do this in a way that it not only achieves the marketing job it's meant to do, achieves the positioning about transporting people to paradise, but also thinking through creatively, what else could we do in this touch point to make people want to talk about it, share about it? And so that has a multiplying effect across all the marketing that we do. For example, this is the sign-up form for when you join the company. You get to choose from over 4,500 honorary roles with us, from shrimp cocktail designers to head of hot tubs to SVP of speedboat weddings. So that becomes super fun when we have our parties. We have over 300,000 employees that come to these events and make for a really, really fun role-playing way that we play with our customers. This is what our packaging unboxing experience looks like. It looks like we bought our products from a pharmacy in 1984, complete with scratch-offs and a dot matrix printout paper of the receipt. And then we really put this through all the various touch points, even the most mundane, particularly, or like something even like Amazon here, where this is the collections page of Amazon. We look to go, how do we stand out, tell people we're the fun choice, and then how we give them something to talk about. So every one of our sunscreens looks like this on Amazon. It comes with an air freshener, so it jumps out at you and tells you that we smell great and we're the fun choice, but then that air freshener becomes a device that is a talking point for several months after in your car. So that's it, back to the moderation.
Back to our stand-in moderator.
Stand-in moderator. Thank you, Lach. I mean, I think what you just described is truly what we mean by creating an inevitable brand. And an inevitable brand is a brand that has such high authority and clarity and consistency in the market that it feels unavoidable. Like, this brand needs to exist, and it becomes of course, vacation does what it does and exists. But back when we invested, back in the day, and maybe Rich, you could take us there for a minute, what made vacation investable at the time, really before scale? And what were some of those early signals that made you realize that there is something here?
Yeah, I think when you're a sector specialist investor like we are, what people don't understand is the breadth of what we see in our particular categories of interest or specialization. And so it's that breadth that we see. Make an example of, I see 100 sunscreen brands. 97, 98 of them are going to sound exactly the same. 2 or 3 will sound different. Those 2 or 3 is when your ears perk up and you lean in and you want to learn more. I don't know about you listening to Lach's on vacation, but that did not sound like a typical sunscreen brand. And all the little touches that they were bringing to it with the experience of the packaging, the 80s nostalgia, the bringing fun back to the category, the fact, quite frankly, that this brand had a fragrance assortment in addition to a sunscreen assortment and labeled itself the best smelling sunscreen. These were all things from a brand perspective that were so unique and differentiated versus what was out there. And so first for us, it's always spot what sounds different and disruptive. Does the category check your box? Yes, sunscreen. Now what about the company itself? And for us, as an earlier stage investor, there are certain things we can look for from a metrics perspective. And here we were seeing a lot of adoption from retail channels to want to carry the brand. They had very strong direct-to-consumer metrics around retention and repeat behavior and consumer shopping across the different SKUs. And obviously, we're very familiar with the margin profile being acceptable. And so when you sit back from it, for us, different, just sounds different, Starts with the brand, and then the unit economics fall into place.
And so you think about maybe back then, those are the reasons why you felt a little bit more certainty investing early. Did you worry about anything back then?
We worry about everything when we invest, but when you look at something early, you do try and figure out the balance between what's exciting to you about it and what can go wrong. And I think, we talked about the crowded category, but the reality is every category that we ultimately invest in is crowded. Every consumer category is crowded, which is why you look for the standouts. I think what was unique and different here that gave us a little bit of pause initially, quite frankly, was the lack of uniformity in the way the packaging looked. There was a example of Sunbum on there. Every Sunbum product is that brown and yellow, very unique, consistent packaging. This was a little haphazard. It had this candle and fine fragrance business as well. And so when we thought about it, does this brand, when it grow up, is it going to be Sunbum? Is it going to be a sunscreen brand? Or is it going to be more of a lifestyle immersive brand? And that can be challenging to figure out where the value creation might come from when it has that type of opportunity. I think we convinced ourselves that it actually could be both, which was a more difficult thing to convince yourself. But the brand attributes, the retail distribution we had, the products that were resonating, it led us to believe it could capture both. I think one of the things that we try to do as an investor when we have conviction but are worried about some of the risks is we'll try to undersize perhaps our initial investment to balance the risk associated with it. So our initial check into vacation was undersized slightly relative to our typical average check. But having been on that cap table and spent, I think it was 12 or 18 months with them executing their plan, watching what they did, seeing how it grew beyond all of our expectations, we then led their Series B, which Cristina mentioned, and that literally took, for us, what was a small $500,000 initial investment up to a $10 million total investment over time. It's now our largest investment across our fund portfolio, and it's because of that conviction that we learned as part of being on the cap table.
So Rich, you mentioned cap tables, and Lach, I'm sure you spoke to dozens of investors throughout this journey, and I'm curious if you could talk a little bit about what maybe investors misunderstood about the brand as you were having those conversations.
Yeah, I think the fragrance piece was part of it, was one of it, like which category, which lane are we in? But more...
Talk about what the fragrance smells like, though. No,
the world's best release sunscreen. Well, I'll talk to that for a second. Like, one of the reasons we did that was because we went out with the positioning the world's best smelling sunscreen. So fragrance is always meant to be, for us, a way to give credibility for the fact that we really do have the world's best smelling sunscreen. We work with great perfumers and things like that, and so that drives the sunscreen sector of the business. So it's not necessarily meant to be a pure play into fragrance. It's actually meant to be a marketing tactic to support sunscreen. But I think the thing that most investors back then were nervous about was whether or not we were novelty and a flash in the pan gimmick. With the whole 80s thing that we were doing. But there was actually, and that's fair, right? But like there was a lot of method towards that potential madness there. And that was simply the fact that when we have spent our careers in marketing and we're quite disciplined with it. And so when we'd done the research and looked into the category and the history of the category, we had actually seen that fun was the dominant positioning within the category for the most of the category's lifetime. So from the 80s, 70s, 60s, 50s, 40s, before, like it was all about fun. One of the industry was based around tanning and looking good. Something shifted in the 90s where we learned of the dangers of tanning, and then the whole positionings of all the category turned very clinical. So we actually thought, well, okay, people are on board with wearing sunscreen now. They want to look after their skin. It's time to have fun again. And the fact that this was the dominant positioning for brands for 50 years, and now there's just a white space there, that we felt pretty certain that, like, having a fun sunscreen brand, there was some method to that. There was something in that. And then the 80s and that sort of 90s sort of look to it was actually quite strategic too. It was done in very intentionally to harken back to that time period, to when that was more fun, but also we wanted to create something that was timeless on the shelf, that something that was felt just as relevant today as it would have looked 20 years ago, as it will look 20 years into the future, because trust is such an important driver in the category for sunscreen.
And fragrance isn't just a differentiator for you guys. It also, from a business perspective, makes sense, because as you think about sunscreen, it's a seasonal product or occasion-based product, and by launching these other categories like fragrance, you're actually able to, combat that seasonality a bit. So it made sense as a clear differentiator, and then also helped from a business perspective.
Yeah, absolutely. And then again, that becomes like a talking point in someone's vanity, or when someone's wearing it off season. The other thing, it became a further disruptor on the shelf. So Ulta Beauty got behind this approach, and they put fragrance and our testers of our eau de toilette right in the sunscreen aisle, which I think that was a real game changer when that happened.
Also drove up price point and margin for the business.
Yeah.
Yep. So let's switch gears a little bit and just talk about the partnership with TBV. And Lach, I'll go back to you. Can you talk a little bit about what actually changed after TBV invested?
Yeah, I think basically as entrepreneurs and people that have spent, my co-founder and I would spend our whole careers in advertising, we're pretty confident about our abilities in marketing in general, but we didn't have much experience within the beauty category itself. So I think we've had advisors along the journey with us from our pre-seed and seed stage, where you'd get on a phone and speak once every couple of weeks with somebody that may or may not have had any category experience. But it was very, very limited. And I think most investors obviously bring the capital and they can talk about value-add experience offerings as well. But I think with True Beauty that the real difference was that it felt as if we had a partner that was an advisor to, that had real depth within the beauty category. So I don't think there's been, and then the sort of availability to be able to make decisions with you. I think we've basically made all big decisions with you guys, and we're sort of on text even to that level of just day to day, which I think is very different to the relationships we've had with our other investors.
And as you think about how the partnership impacted any specific business decisions, I mean, what could have gone wrong or gone differently had maybe you didn't have that partnership?
You know what? I think one of the other things to this point is that I think you guys have done an incredible job in your own right at like marketing and building your own brand. And one of the most beneficial things that's come from this was that the name carries weight. There's some gravitas with it. Oh, you're with True Beauty Ventures, so that helps with retailers, that helps with lenders, that helps with hiring, and in particular hiring. Like, had we not maybe had your support, we may not have been able to hire so early our current general manager, because she took a leap of faith of this coming from general manager of Bondi Sands when we were Series A level and basically 1 or 2 years into the journey, and she's super experienced, and so it was a big risk in her career to come to us. But she'd subsequently said one of the things that gave her some conviction was the fact that we were backed and supported by you guys. So
that's amazing.
Yeah.
Amazing. And Rich, I'll shift over to you. As you think about the partnership over the years, what are the areas that you think True Beauty leaned into that really enabled and helped accelerate Vacation's continued growth?
Yeah, I think Vacation, not unlike any other brand we would invest in, I mean, there are similarities across the portfolio where you have to lean in. First and foremost is team. And I think it was said at the first fireside this morning, you bring the best possible people into your business and better things will happen. And so I think we do spend a lot of time with vacation, but more broadly speaking across the portfolio, making sure you hire the right people. He gave the example of the GM. So I think leaning in wherever possible on team augmentation and organizational build is critical. I think uniquely for vacation, there were two other areas I think that we spent a lot of time with. I think first is the distribution. Where is vacation purchased and sold? Again, most brands will play in either food, drug, and mass channels, or they'll play in specialty, or they'll play in department stores. Vacation, with the strength of its brand and the diversity of its product assortment, plays from high-end distribution like Nordstrom down to club stores like Costco and CVS. No other brand in my entire career has had permission to play across that breadth of distribution. But one of the things we spend a lot of time with them on is the sequencing of that distribution. Lots of young brands make the mistake early on of fulfilling the purchase order. The retailer is interested, fulfill the purchase order, you get your sales. At the end of the day, you want to prove your productivity and your capability with one retailer before you open the next and before you open the next. And so sequencing that distribution annually also gave us opportunities to have growth levers to pull to continue to grow the brand over time. And so Walmart's still out there for us at some point. They've been asking for an order for 2 years now, and it's just not right for us yet, but that will come. If we do all the other things right, their interest level will remain. I think the last thing is around product innovation. I think it's very easy to launch a lot of products, but the product innovation has to work, especially in sunscreen, or it's coming back at the end of the season when it's not sold through. And so really focusing the team on fewer, better, bigger launches than just a lot of launches, I think, was something else we spent a lot of time on.
Yeah. I think what you're alluding to is also the patience needed to build a brand. I mean, we talk so much about the power of brand, both in a venture capital fund, but also in a consumer brand. And building brand equity takes time. And so having the right partners, whether you're brand founder that's raising money for the first time, or one that already has capital partners, making sure that the people around you actually believe in the path to growth, and making sure that that path is actually supporting the brand building efforts and not just a growth at all costs type of mentality. Why don't we switch a little bit and talk about...
Hold on. Time?
Oh, are we done?
I think we're done.
All right, well, then we're done. Thank you all so much for being here. We appreciate it.